Less robust when it comes to demand from China for iron ore, though.
Yeah, I mean, certainly, the issues with the property sector are something which have been bubbling away in the background for some time, and the easing of restrictions late last year and the possibility, I suppose, of further stimulus measures did provide some hope that we could see a turnaround, but clearly that hasn't happened. And even with, I suppose, the reports just this week that they'll ease again some restrictions on purchases of homes, as well as lessening the required down payments on properties. It still feels like the consumer in China is still very reluctant to put money back into the property sector, particularly for an investment sort of purpose. So that's going to weigh on concern on new construction activity in particular. I think at the moment we still feel like there's a little bit of positivity around the property sector for completions, and that could result in, still relatively okay demand for downstream materials. So I'm talking, the copper and aluminiums, which tend to result in stronger demand due to, the completion of those houses and the filling out of consumer items in them. But new property construction remains weak, and we can't see that really turning around in the near term. So it does look like, for us, a fairly negative backdrop for iron ore and steel prices.
To your point on copper, we actually saw demand improving a little bit, but we've also seen some false starts for copper. So what's the outlook for the price here?
Yeah, look, it depends where you look. Certainly that broader sort of manufacturing outlook does cast a bit of a spell across the market. But, when you look at, government efforts to increase investment in infrastructure, particularly in clean energy technologies, I mean, they're obviously trying to boost the sales of electric vehicles in that market. They're continuing to invest strongly in grid infrastructure, and certainly the solar and wind capacity build-outs are going gangbusters. So, I do think there's a bit of offset against that sort of weaker manufacturing backdrop, and I think that will take hold a lot more in the second half as things sort of stabilise.
Are there any commodities that we're overlooking at this point, especially when we're we're seeing a bit of a mixed picture when it comes to dollar demand as well, and the strength and weakness of the dollar for the rest of 2023?
Yeah, well, it's a really good point. I mean, the whole sector has been, weighed down by that unexpected strength in the US dollar, and I do think there'll be a point in time in the not too distant future where the Fed will start to pause on its interest rate hikes, and that should provide some relief for the US dollar, which has in all aspects has probably been a pretty strong headwind for commodity markets. That weaker dollar that we expect to see in the second half of this year should provide some additional sort of tailwinds for markets like gold, and certainly combined with the stronger demand, particularly from central banks, I think that's one which we expect to see stronger shortly.